Well, I'll tell you what, the tariff drama keeps on rattling the markets. Yesterday, drawing us down quite a bit. Today, we have initial jobless claims. Tomorrow, we get personal income and outlays, which is going to tell us a lot more about what to expect for GDP when we look at the Atlanta Fed GDP now. So we want to talk about that in this video and give the technicals of where we could potentially go in either direction across the S&P 500, NASDAQ 100, Russell 2000. I'm going to talk also about Bitcoin and XRP in this video as well. Bitcoin especially being the crypto index. Thank you, Crypto Well, for talking about that. Crypto Will, myself, and some others, by the way, have a Discord together, thousands of members. You can come on over and join us. Links in the description. 50% off your first month when you use the code word CASH. The trades, the wins coming in all the time, learning how to profit throughout any conditions that we happen to have in the markets. And you guys can be part of that. I'll tell you more about it later. In the meantime, let's get into the charts. So let me pop this up here for you, and we're going to go to SPY. So looking at the S&P 500's ETF that we have here, or I should say an ETF that tracks the S&P 500, you can see where we came down to, and then we crossed through the 23.6 through the 38.2, and well, sold off pretty heavily yesterday. And well, I guess that's to be expected. So let me put down the EMAs, we'll put up the SMAs. Where did that put us? Well, we were just above the 200-day, and I said we needed to stay above the 200-day. We needed to stay up above the 20-day, and we were actually fine unless enacted upon or by some outside force. In this case, it was the tariff stuff. Now, once again, just smack the market back down, put in more uncertainty, and now we have somewhat of an uncertain day today. Bigger tomorrow is personal income and outlays. So sideways, maybe some downward pressure because of what we have for PCE in terms of inflation. And then also, which mind you, could be a little bit higher if we see a bit of a pull forward in front of tariffs or trying to head off any sort of tariff news that we may have gotten. So we get that PCE data coming in for February here at the end of March, coming tomorrow, 8:30 a.m. We want to be watchful for that. Also 10 a.m. Michigan consumer sentiment, even though it's not usually wildly different from what we see at the midpoint when it comes out about middle of the month. The end of the month can still be different, and we certainly might, if we see it go lower, then the market could react to that as well, especially if it drops the economic outlook or if it increases the outlook on long-term inflation. So just some catalysts to watch out for. The market ready for anything, being near the 200-day like it is. Maybe it draws back a little bit. Maybe it holds near the 20-day. We're going to have to watch today to see what we get for that. We do need to get back up on top the 200 in order to stay bullish. If we look at the weekly chart, you can see we came down to the 50-week, and then so far still holding out support. That's a good thing for us. We want to see the RSI, the momentum indicator, daily and weekly cross back up over 50, not only for SPY, but also for QQQ, which to its most recent Fibonacci retracement actually held a lot truer to getting rejected from actually just below the 200-day, almost the 38.2, and came down to about the 23.6. So let me take down some of the moving averages for you so it's not so noisy here. And I apologize for the color coding differences that you might see on this one as I updated the indicators. They also reset my color scheme that I had on there. So this is still the 200-day coming up across here. This yellow one is the 20-day coming down this way, and this orange one is the 50-week that you have moving right across here. We're still down below the 200-day. Probably still some correcting in big tech taking place right now, and that's about where we have it for the Qs, that being more heavily influenced by big tech, whereas you have the S&P 500 more influenced, even though big tech is there for the most part. We also have a lot of big banks and stuff that also seem to provide, at least in this market, a little bit more stability, a little bit more levity, if you will, for the S&P as per the 200-day moving average. The RSI almost crossing above 50 and just getting rejected after yesterday. So if we get good news coming from PCE, we get some subdued inflation, but we also see that personal income is remaining strong, giving us indications about what to expect in terms of GDP or even the labor market. Those are also things that we're watching. We also want to watch the savings that people are experiencing, because if they're starting to hold on to the money rather than spending their money, that also has GDP implications as well. So we want to be watchful for that. I think we get the final estimate for GDP today for Q4 of last year, and then GDP for Q1, the advanced estimate comes out April the 30th. So expect any amount of volatility come in as we start to get into that last week of April, and we'll see where the market's sitting. Now, IWM, I'll tell you what, for IWM, one of the coolest things besides the cup and handle that I've been talking about. Now, mind you, here's the cup part of the cup and handle. We have the handle coming off of this, and you can see that we bounced just above that 200 week, as this is the weekly chart we're looking at. A confirmation would be for a trend line, which I don't have the technical up here for you right now because I have another thing I would like to show you. But as this handle comes down, if we're able to get up above it, we could see 40-45% upside over the next year, 2 years. We're going to have to watch and see. That doesn't necessarily mean from right now. We don't want a lot more retracement. We don't want a lot more push down through this area because 50% retracement, good. 61.8 retracement starts to get into this chop. It's a little bit deep for handles for a cup and handle pattern. So we got to watch just how far down that handle comes, because the deeper it is, the worse it is for the pattern. It can break it. So we do have to break up above that top trend line for the handle in order to confirm the pattern. Right now, we just don't have it. Now, the next coolest thing that I want to show you, let's go out to the monthly chart on this thing. Check this out. So in this white area, here's where a lot of the action seems to happen for IWM. And also all the way down to the green part. There's the predominant part of your action. The white is, and here's about the middle that we would have. As a matter of fact, maybe this top one I should put yellow instead of white. We'll do that. We'll change that color coding on here because that starts to be a little bit cautionary, because once you start to get above that, you can see the few times that we have gotten above it that it wasn't so good for what came afterwards. And then here where we had a lot of the quantitative easing following the pandemic, lots of stimulus checks coming out, Russell 2000 stocks, that easy monetary policy absolutely caused an eruption. And then we also had that more recently as we started to get into more euphoric times. And what happens every time we get above the red, we sell back down. Now, if we are able to play out that cup and handle pattern on this one, well, that's also very telling for us for what we could expect to happen as it pushes us up towards that 300 mark. And if it takes time to do that, it might still put us up above that red, which means that it could potentially once again correct and sell back down again. If we're looking for buying times, being down at the white, being down at the green, or even below the green, man, we got to be seeing a lot of pain in order to be down below this green part of what we have in this big old bull channel on this monthly chart for IWM. And take a look on this most recent sell down. We came down exactly to where that is. And mind you, I could back that up. It doesn't really matter that I had it there, because you can go back to any point in history and you can see that we rode along that. So I could move that indicator, or that point, rather than to the most recent one. I could move it back here instead, and you can still see it's nearly perfectly explaining where we end up with that bottom most recently. So not that I can tell you what to buy or sell or when to buy or sell, but I will say that when we come down to this white line, it seems to actually be a fairly good bounce point for IWM. Same thing for the green, and below the green is start to where you get into value territory. Most recently, that happened between October and November of 2023, and it's usually followed by a very rapid rise. Check out what we had going back to the pandemic as well, down below the green. And man, we just ripped up from there. So that looks like, well, we get hard times, small caps take it on the chin, but then those easier times, easier monetary policy, when we start to inflect back upward, start to rotate back upward, it seems to really put in a lot of performance. This most recent time that it broke down below it, there we go, from from trough to peak, I guess, on this 53% climb just from what we had in October of 2023 until its peak in November of 2024. So that's a really good time to see a 53% return on the small caps. So Russell 2000 stocks, IWM still stays one of my favorite to watch. So let's move over into Bitcoin. And for Bitcoin, once again, monthly chart. And what I wanted to show you on the monthly chart with the Fibonacci extension tool that we have, going back to the lowest that's historically recorded on here, to the peak that we had in 2021, to the trough that we had in November of 2022. Thank you, FTX. When we do that, you can see 84,477 is where we have that full retracement, if you will, that full movement from the beginning of Bitcoin's history on this chart until that peak in 2021. We made that same movement, and that took us up to 84,477. Well, where are you seeing the bottom of these two candles? Right along this line, that's 84,477. And when we go from that trough to the peak that we had in March of 24, to the valley that we had, the trough all the way down in August of 24, we actually start to double up on our trend lines to 85,616, and we are just above there right now. So if we go down to the daily chart and reset the view on this, you actually get a little bit more to see of that with this. We are up above that. We have that as support right now. We broke down below it. We're able to cross back above it. We have the 250 EMA and SMA just above it, and we're trying to break this most recent trend line resistance. Bitcoin could be getting ready to snap higher from right here. And that's also exciting for XRP, for example, which has its Bollinger Bands. These are 3 standard deviation Bollinger Bands. look at how narrow it was. This is what I mean by narrowing of the Bollinger Bands. When they narrow like this, it can lead to breakouts. And you can even see with the most narrowest times followed by the breakout bubbles that you have. And we're starting, there's another narrowing followed by another breakout moment. We're starting to narrow again as we get a lot of this sideways trading happening to XRP. So let me summarize this and talk a little bit more about what we're seeing. Right now, that question of risk environment, what risk environment are we in, is still going on in the markets. We're trying to answer that question. Until we get that question answered, it's going to be really hard to move in a decisive direction. But I will say we have a lot of reasons that bullishness could still happen. We have some hesitations that if GDP goes the wrong way, if inflation goes the wrong way, if tariffs really put pressure on inflation that makes the market think inflation is going to go the wrong way, which could affect the labor market, could also affect GDP as well, and then also could affect monetary policy. Those are the four pillars that prop up markets as they either show cracks, signs of cracking, or they're just believed to be cracking. Any one of those things causes market weakness, causes us to sell down. We got to look at things through those four lenses. So keep in mind those pillars that I keep talking about in my channel. If you want to see me talking about more of these things, more of my technicals, more of my plays, it's over at the Discord, along with the other panel experts that are over there as well. Stockmo's over there, does live trading, usually around 2 p.m. every day. Thousands of members already in Discord, highly positive community, supportive community, just out there helping each other to achieve financial freedom. You got the bread pot over there. You also have AI tools over there. You have advanced charting over there. Tons of products and services, and it can be yours. You can save 50% on the first month just by using code REDCASH. If you guys want to learn to do this technical analysis yourself, trade using the technicals, learn about trading options, you can do that through Stockmo Academy. That link is down in the description. Sign up using the code word DOCTOR. It's going to save you a ton of cash. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. See you next video.